Today I would like to introduce an important and widely used topic in financial analysis is known as ratio analysis. In the modern business world, merely preparing financial statement is not enough. Understanding where those figures actually indicate is more important. This is where ratio analysis play a vital role. Ratio analysis is a technique used to evaluate the financial performance and position of a business by establishing a relationship between various items of the financial statements. It helps management, investors, creditors, and other stakeholders to access profitability, liquidity, solvency, and operational efficiency of an enterprise. It supports informed decision making, effective planning, and financial control. Thus, ratio analysis acts as a powerful tool that transforms accounting numbers into valuable insights, helping businesses measure their financial health and future prospects. The following are the summarized profit and loss account for the year ending 31st December and the balance sheet is on the date sheet. Here some details of trading and profit and loss accounts are given. Opening stock 99,500, sales 8,50,000, closing stock 1,49,000, purchase 5,45,250. For this trading account, gross profit are 3,40,000. Profit and loss account expenses for selling and distribution expenses 30,000, administration expenses 1,50,000. And income side by non-operating income 3,000, profit and sale of shares 6,000. For this profit and loss account, net profit are 1,50,000. Balance sheet as on the date, liability side 2,000 equity share of 100 each 2 lakhs, reserve 90,000, current liabilities 1,30,000 and profit and loss accounts are 60,000. In asset side, land and building 1,50,000, plant and machinery 80,000, stock 1,49,000, sundry debtor 71,000 and cash and bank 30,000. For this balance sheet, both liability and asset sides are 4,80,000. Now we calculate gross profit ratio, net profit ratio, operating profit ratio, operating ratio, current ratio and exit test ratio. Now we calculate gross profit ratio. Gross profit ratio formulas are gross profit by sales into 100. For this trading account, gross profit and sales amounts are given. Gross profit 3,40,000, sales 8,50,000. So now we apply the formula gross profit by sales into 100. Gross profit ratio are 40%. Next we calculate net profit ratio. Net profit ratio formulas are net profit by sales into 100. For this trading account, net profit and sales amounts are given. Net profit 1,50,000, sales 8,50,000. So now we apply the formula net profit by sales into 100. The net profit ratio are 17.64%. Next we calculate operating profit ratio. Operating profit ratio formulas are operating profit by sales into 100. Operating profit is equal to net profit plus non-operating expenses minus non-operating income. For this sum, net profits are 1,50,000 are given. Non-operating expenses are loss on sale of assets 4,000. Non-operating incomes are non-operating income 3,000 and profit on sale of share 6,000. So now we apply the formula operating profit by sales into 100. 1,45,000 by 8,50,000 into 100. So operating profits are 17.5%. Next we calculate operating ratio. Operating ratio formulas cost of goods sold plus operating expenses by sales into 100. Cost of goods sold means sales minus gross profit. For this trading account, sales 8,50,000, gross profit 3,40,000 are given. So cost of goods sold for this sum 5,10,000. Next we find out operating expenses. Operating expenses for this sum selling and distribution expenses, administration expenses and financial expenses. So total operating expenses are 1,95,000. So now we apply the formula cost of goods sold plus operating expenses by sales into 100. 5,10,000 plus 1,95,000 by 8,50,000 into 100. So operating ratio for this sum 82.95%. Next we calculate current ratio. The formula of current ratio are current asset by current liability. For this balance sheet, current assets are given, stock, debtors and cash at banks are current asset. So total current asset is 2,50,000. In the balance sheet, current liabilities amount 1,30,000 are given. So now we apply the formula current asset by current liability. The current ratio are 1.92:1. Next we find out acid test ratio. The formula of acid test ratio are liquid asset by liquid liability. Liquid asset means current asset minus stock. Current asset already we calculate 2 lakhs. So minus stock 1,49,000. Liquid assets are 1,01,000. Current liabilities means current liabilities minus bank OD. For this sum, bank OD is not given. So liquid liability is 1,30,000. Now we apply the formula liquid asset by liquid liability. 2,55,000 by 1,30,000. Liquid ratio or oxy test ratio for these sums are 0.77:1. Thank you.